Your money matters, especially because you need a lot of it to buy a house. Dan Wetzel is Vice President of Mortgage Lending for APGFCU. Welcome.
Thank you.
I'm happy to have you here because, prices are rising all around us, especially when it comes to rent. So how can people afford to buy a house, and how can APGFCU help?
So first, we offer programs that require very little money down, anywhere from 0 to 3.5%. These include programs for first-time homebuyers, veterans, borrowers looking to buy in a rural area, and the credit union even offers its own specialized 0% down program. Next, we leverage federal, state, and local down payment and closing cost assistance programs to further help borrowers come up with the funds they need for closing.
So you've got a comprehensive strategy to make sure that they're getting the best options for themselves. Again, tell us who's eligible for these programs. There were a couple of categories.
Yep. So for the assistance programs, an applicant will generally need a minimum credit score of 640. Okay. Beyond that, there are income limitations. To qualify for most programs, an applicant's household income cannot exceed 80% of the area median income in the area in which they wish to buy. Okay. Now, the area median income is simply the midpoint of household income in a given area, where half of households earn less and half of households earn more. Okay. The current range is $91,520 in Cecil County to $97,360 in Hartford and Baltimore counties and Baltimore City, and this number is adjusted yearly.
Got it. And if someone's living outside of those counties, can you help them as well?
We can.
Okay. So how do these programs, do they have unlimited funding, or should we worry that this allocated amount, these funds, might run out during the year at some point?
Yep, great question.
Yeah.
The assistance funding is not unlimited, and it can be depleted during the course of a year. Okay. As a result, a borrower's best chance for securing funds for their purchase is during the first half of the year, generally January through July or August.
It's better to do it early than wait till later.
It is, and it's not to say that there won't be funding available late in the year.
Yes.
It's just that borrowers optimize their chances by buying earlier rather than later.
Which will give you more peace of mind if that's what you're trying to do. You want to make sure that you can get that done. Some of these down payment and closing cost assistance programs, they're grants, and then some are loans. So explain the difference and how that works.
Yep. So grants generally do not need to be repaid.
Okay.
For the grant programs we work with, 20% of the grant is forgiven each year for 5 years. There are no monthly payments due on the money, and after 5 years, the entire amount is eliminated. Loans, on the other hand, as the name suggests, do need to be repaid.
Pay that back.
But typically not until the house is sold, and as is the case with grants, there are no monthly payments due.
Okay, so how does APGFCU differentiate itself from competitors?
At our core, the credit union's central mission, at our core we're a not-for-profit, right?
Okay.
And our central mission is people helping people.
Yeah.
And given that people rather than profit are our priority, we focus on not just closing a loan for you or on a single transaction, but rather in guiding you and empowering you to achieve your financial goals. Yeah. We're an advocate, and that makes us different.
Yes, and I like also that when people come to you and they have all these questions, you guys have the answers. You can help us navigate this whole home buying experience, even if we've never done it before, or it's been a long time because things have changed. So that is very, very helpful as well. Where can our viewers go for more information?
Website is the best place, apgfcu.com.
All right, Dan, thank you so much for being with us. We appreciate it. We'll be right back with more Midday Maryland right after this. Stay tuned.